LiDAR, which stands for light detection and ranging, is a remote sensing method that uses light in the form of a pulse laser to measure ranges to the Earth. Now, this technology is being used in self-driving cars, but Tesla does not want anything to do with LiDAR. It thinks that it's too expensive, and to maintain it to current standards and up-to-date software is too costly. They prefer to use vision-based systems, which Elon believes is more effective and cost efficient. However, there are companies out there that are using LiDAR technology. They include such companies as GM, Ford, Volkswagen, and Google's Waymo. Now, Luminar Technologies is the front runner of using LiDAR technologies, and they recently announced their Q2 earnings. This article is coming from Benzinga. Luminar Q2 earnings beats expectations. Stock rises on upbeat outlook. Luminar reported quarterly losses of 21 cents per share, which beat the analyst consensus of 23 cents of loss per share. Company reported quarterly sales of 16.2, which beat the analyst consensus estimates of 16.18 million. Luminar anticipates meeting or beating its financial guidance with at least 100% revenue growth in 2023. Company also expects to end the year with a balance of greater than 300 million. Due to business ramping up and launch costs ramping down, Luminar expects to lower its free cash flow spending in the fourth quarter by approximately 50% relative to the first quarter, and the second quarter losses of 79 million. Austin Russell, who's the founder and CEO, states the following: as we realize our long-term vision, Luminar continues to prove that it can execute our ambitious plan across hardware, software, and beyond. This puts us on the path to meet or beat our company level milestones for the third consecutive year. Luminar has a very aggressive goal of launching 1 million Luminar equipped cars on China roads by 2028. Luminar is working with TPK to produce up to 600,000 annual capacity locally. With that said, let's get into the analyzing the charts, and we're going to start with the monthly chart. And as you can see, we had this huge support which became resistance band at the $10 level. Price did reach a low of $4 back in January, so that's the bottom. If we go to the weekly chart, we can see in recent weeks massive selling pressure based on these wicks between $7 and $8. And because of this massive selling, price is finally breaking down. If I just draw a trend line on the weekly chart, you can see how price finally closed below the uptrend line. So the question is, how far will price go down? Well, you see these wicks here. This serves as a temporary floor. This is at 550. Let's look at that on the daily chart. And we're going to put just a small band here to represent short-term buying pressure. Now on Friday, price did gap down to close greens, so that is bullish. However, now price is going to be dealing with not only with the weekly uptrend line, but also all the moving averages. So I anticipate a bounce lower in the coming weeks, at least to retest the short-term buying pressure at 550. Now, if Luminar continues to burn through crash and not produce a lot of revenue, prices are going to go lower, like we saw with many other EV makers, startups. They need cash to get to that economy of scales. So this is a short-term target, but if we start seeing closes below 550, there's nothing stopping price from retesting the all-time lows. Luminar is a stock that I would avoid at the moment, as I think there will be better levels to get in to go long if you are a believer in the technology long term. Thanks for watching. Subscribe, please like the video.